Good morning, everyone, and thank you for joining me in today's daily market review. It's the 23rd of March 2021, and this is Mohammed Yaoud, Head of Market Research at CJC Markets in the MENA region. Let's have a quick look on the markets to know what's happening. Basically, we didn't have any major movements yesterday. The gold is moving in a sideways range, as well as the dollar index. Let's check what do we have on the charts and what does the technical analysis tell us. Please stay tuned. Welcome back, everyone, and thank you for being here. Let's start by having a quick look on the dollar index, which basically is doing nothing at the moment. It's just moving in a sideways range, hovering just around the 91.60 points on the 4-hour time frame. It's a sideways move, a clear sideways. What we are having at the moment, or the expected move, is that we might be able to retest the support one more time at the 91.35 points to the downside. We had this upward movement on the 19th of March. This is some sort of a top formation. We have started to create lower highs, so basically the trend during the day is bearish, or the expected trend is bearish through the day to retest the lows at 91.35. That's what we're having on the dollar index, supported by an expected move to the upside on gold trading. Let's check the gold chart, currently trading at 1739. What we are having on the 4-hour time frame after this move to the downside is this is just a corrective move. The corrective move should end at around 1762 by retesting this 200 exponential moving average on the 4-hour time frame, and also this is the weekly 8 exponential moving average. So this is key, very key level on the weekly time frame. We are having some sort of a gap on the weekly time frame between the price and the exponential moving average 8 on the weekly time frame. So what we are expecting is basically for the gold trading to fill this gap during the day by continuing the move upside to 1762, just a simple retest, and we'll be continuing the move to the downside to target $1,700 per ounce. If we didn't have this move to the upside, we might be continuing directly the movement to 1700. So either way, gold is expected to be bearish during the day. However, it's just a matter of the retest. Will it continue the move to the downside from here, 1738, or the best scenario, or the better scenario, is basically moving upwards to the resistance at 1762 and then extending the losses from there to target $1,700 per ounce. That's what we are having on the gold trading. Regarding oil trading, basically after this major sell-off, we did have some sort of a descending triangle just formed here at around the resistance zone. We broke this triangle to the downside, target hit. We did reach the support zone, the very important support zone at 59.50. What we are expecting at the moment on oil trading is some sort of a sideways range. Our key levels to watch should be basically 62.38 to the upside and 59.50 to the downside. We are expecting just a ping pong movement between those highs and lows. Of course, any breakout in either direction, to the upside or to the downside, should initiate a new directional movement in the direction of the breakout. So oil could be traded in a sideways range, 62.38 to the upside, 59.50 to the downside, and that's what we're having on the crude oil. Let's check the Dow Jones. Basically on the daily time frame, the Dow Jones did break this upper channel line of the upper wedge, or this upward trend line. We broke above this to the upside. We did have a brilliant retest. The retest was just around those important levels of 32,450. Right now, it seems that we are having a successful retest. We did have 3 bullish candles to the upside, supported by a strengthening momentum from here. So on the 30 minutes time frame, we are expecting just a continuation to the uptrend, or the continuation to the move to the upside, because basically this was a downtrend we did start to form some sort of a higher high, just higher than the reference point, which is the highest low during the highest high during this downward trend. So what we are expecting to have is some sort of an up move, a retracement, an up move, and so on to target those highs at 32,240 points. That's what we're having on Dow Jones. However, our key level to watch on the downside should be this one, 32,455. As long as we are trading above this one, we are still, or the bullish scenario is still intact. Of course, if we did trade lower than the 32,455, this bullish scenario should be completely null and void. And that's what we're having on the Dow Jones during the day. Bear in mind that today we're having Jerome Powell's testimony in front of the Congress. This is very key. We might expect some higher than usual volatility in the markets. So please stay safe, trade safely, and thank you for watching. We will catch up tomorrow in the daily market review. Thank you very much.
CJC Markets is a leading global financial institution that has granted a derivatives issuer license issued by the Financial Markets Authority New Zealand. CJC Markets has a wide range of products, latest technology platform, and eminent customer service. CJC Markets offers superior execution, competitive spreads, and low transaction costs. CJC Markets. Smart trading, smart life.